Welcome back to Markets Today. The markets today were exactly like yesterday, a day of disappointment when there was profit taking all over the place. And now that it's happening for the second day in a row, the question on everyone's mind, or at least on traders' mind, is this just profit taking, or is this a change in trend? Are we no longer a buy on dips market? These questions, of course, will be answered in the days to come, but the charts may tell us in advance. So let's get the chartist. Sudarshan Sukhani joins us now. Sudarshan, your take on the day's play?
Good evening. Well, markets had a bad day today, although there was an intraday recovery towards 8700, but the Nifty did go below 8700 for the larger part of the day, and two large declines back to back is not good news for the bulls. Trading positions should have been stopped out when the Nifty fell below 8700, and traders then should have no positions in the Nifty, neither long and of course neither short. What this tells me is that the markets have gone into a state of confusion. There was a rally, that rally has been sold into. The selling is not convincing enough to say that the decline has started, and it's certainly convincing enough to stop us out. So the markets are volatile and choppy and not giving us any sense of direction. We have to step away and step aside from this kind of market and do not trade.
Right, Sudarshan, that's on the market. What about individual picks? Anything you're watching out for tomorrow?
A lot of blue chip stocks that had shown promise of rallies are now giving signs of breaking down from their trading ranges, from their consolidation areas, and BHEL is one of them. So for tomorrow, it is possible to go and short BHEL. Short selling should be done only by professional traders, please remember that, and always keep your stop losses. But BHEL was in a trading range, and that trading range is on the verge of breaking down now.
All right. Thanks, Sudarshan, so much for that. We'll see you with the markets again tomorrow. Let's move on now. It's been a very turbulent ride for SpiceJet in the last quarter, but with Ajay Singh on board, the airline is definitely trying to capitalize on the falling ATF prices to try and regain some of its market share. We spoke exclusively with the COO of the company, Sanjeev Kapoor. Let's hear out what he had to say about the road ahead.
At a peak last year in July, we had 21% market share, and the market leader at that time was 29%. We're now down to about 10.5%, and that's because of the crisis we hit in the last quarter of last year, where we had to return aircraft, and obviously when you return aircraft, your capacity falls and then your share falls. The sector certainly is seeing better times now than it was seeing in recent years, both on the revenue side and on the cost side. On the cost side, the biggest benefit that has come our way is the reduction in fuel prices. In India, we've seen growth rates of 18 to 20%, and the balance of the growth rate, the other half, I think is driven primarily by what we refer to as the SpiceJet effect. We started last year stimulating the market and refusing to fly empty seats, refusing to fly half-empty aircraft around, especially in low season.
All right. A number of other stocks were also buzzing in trade today. Let's go across to Mangala Malu for a wrap of the stocks that were in news. Mangala.
Thanks a lot for that. A whole host of stocks were in focus today. We start with the DVR stocks. That list should come up for you on your screen, as reports suggest that NSE is likely to include shares with differential voting rights in the Nifty from June. HCC was also in focus. The company's HCC Concessions is selling stake in the Dhule-Panesar tollway to Sadbhav Group for about 204 crore rupees. Tata Motors was in focus after Jaguar Land Rover wholesale sales came in 16% higher at 50,000 units. Realty was also down in trade today as Glaucus Research Group claims that the company has fabricated its reported capex to mask that they have materially overstated EBITDA. However, when we spoke to the management told CNBC TV18 that this report is completely baseless and the facts mentioned in the report are wrong as well. ONGC and Oil India extended their gains as the government exempts these companies from sharing subsidy in the fourth quarter of FY15. Now, government is said to be footing the 5,300 crore of remaining subsidy in the fourth quarter. Sugar companies, in a sweet news for them, all of them were active in trade today as the food minister says they are going to push for raising sugar import duty to 40% from 25%. DLF was in focus as the company gets an interim reprieve from SEBI's 26 crore penalty order, or reports. That's what reports suggest. Coal India was also in focus. The company gets environment nod for 2 coal projects in Maharashtra. Gammon India was in focus. The company bags 2 orders worth nearly 840 crores. KEC International was buzzing in trade today as well, as the company is said to be selling telecom assets to ATC Telecom for close to about 81 crores. withdraws. The management tells CNBC TV18 that they're looking to hive off non-core assets, and they've sold 200 to 250 crore rupees of assets in this year. Finally, Hero MotoCorp was also in focus as Delaware-based Eric Buell Racing has shut down. The company had invested nearly $25 million in that company. With that, back to you.
Okay, all right, Mangalam. Thanks so much for that wrap-up. Let's get you some more opinion. Vineet Bhatnagar, Phillip Capital doesn't see a sharp rise in the Indian markets in the near future. It's the banking sector which has him worried and left him with the feeling that the April contracts will see some weakness.
There could possibly be a testing of a support level, which if you look at the put distribution at this point in time for Nifty, it is concentrated at 8,600. And technically, if you look at it, the worst case situation could be at actually 8,200. Bank Nifty index will be one of the foremost contributor to the slide that I am visualizing. And IT also is not appearing to be helpful. It is also possible that the traditional and routine defense plays that we look at, such as the FMCG and the large cap pharma, may also not be supportive and therefore contribute to the slide towards 8,600 and below. In this entire possible downside of the Bank Nifty index, there will be a handful of smaller private banks that may outdo the Bank Nifty index, and the names that come to our assessment are Yes Bank, IndusInd Bank, and even Kotak Mahindra Bank. As far as the tactical play and an 18 to 24 month situation is concerned, where Nifty can go much beyond what we have all visualized up till now, names like Bank of India, Punjab National Bank and SBI will always and should find name in my portfolio.
All right, with that, we wind up this edition of Markets Today, but tomorrow is going to be crucial. Last day of a truncated but a troubled week.
Thank you for watching. We'll be back with the markets tomorrow morning.